Yeah, hello and welcome back to my channel. We have now concluded our first overview over the treatment of exports and imports in German value-added tax law. And it's now time enough, or it's now time at least, to practice and deepen our knowledge a bit by dealing with cases. And so let me go to exercise case 11. That is, as you see, a lengthy one, but I think it's still a simple one. Three events happen where you will be asked for your professional reasoned opinion. So let's talk about how we deal with that case. Remember first how every value-added tax case always has to be approached in German law. There was a strictly regulated testing scheme. The first step was always, is an event taxable at all? And you remember taxable, that meant, does the VAT Act become applicable, the German one? So first you will have to check or to distinguish if you have to check paragraph 1.1 number 1, that's a regular case, or the special case of 1.1 number 5. Until now, that's relatively easy for us. We have not yet spoken about the special case of 1.1 number 5, so we can always opt for 1.1 number 1. Then we have to look at all the conditions, they are 5, which are posed by 1.1 number 1, and if they are all fulfilled, then we have a taxable transaction. If something is not taxable, the case is closed at that point. The only thing which we then have to comment is the last entry in the testing scheme, input tax deduction claims for material or other things. Are they affected by the non-taxability of the output or not? But everything else probably then can be skipped. Now, if an event is taxable, the next question is there an exemption from the tax, or is the event fully liable to tax? That is usually regulated in paragraph 4, and in our context, dealing with experts, we will probably concentrate especially on paragraph 4, number 1, letter A, USDG, the tax exemption for exportation to a third country. The next step is the tax base, and even in case of a tax exemption, we still have to deal with that because also tax-free revenue has to be declared in order to make it possible for the fiscal administration to check where your money comes from, and also for certain other checks. Well, then tax rate and tax amount. If there is a tax exemption, naturally that makes no sense. There is no tax rate for the tax-free event, and there is naturally no tax amount different from 0, so we can leave that out in such circumstances. Formal aspects, who is the taxpayer? Now, if a transaction is tax-free, it sounds as if taxpayership makes no sense, but on the other hand, also tax-free transactions have to be declared, so who is the responsible person might still make sense there, so we can still decide to have a look here, who is the responsible taxpayer. The arisal of the tax is also naturally not a big issue when there is no tax. On the other hand, if you have to declare and give proof for a tax exemption, also then one has to think about when, during which month or preliminary declaration period, as it is more exactly said, do you have to declare that, so it's not completely senseless to think about that if you are willing to have a comment on that. Invoicing, are there requirements for an invoice? For example, you know there is always a complete set of requirements to make an invoice valid for VAT purposes. Sometimes when you have tax exempted things, there must be more. For example, a hint on the exemption which you claim. So a remark might be valuable here. Declaration duties, sometimes for transactions within the European Union, so not our game here. There are additional declaration duties in a so-called recapitulative statement. I always stumble over that. So one might think about that, but probably with an expert there is no big outcome here. And the next thing is the joker at the end. Is there anything particular in that case which is not covered by the normal testing scheme? If so, mention it here. A classical point or classic point here is, has the entrepreneur perhaps confirmed a VAT amount in the invoice which is too high and which forces him or her for that reason to pay even the exceeding amount? Because if an invoice confirms VAT which is too high, different from what is correct, can only be judged after you find out how the case has to be treated correctly, how the invoice has to be written correctly. Only then you can compare if a mistake has been made. If you try it on first glance, you might be possibly wrong. The last entry is input tax aspects, and that, ladies and gentlemen, is well, to be answered for both parties involved. Can the customer claim input tax? Usually, if something is exempt, there will be no VAT charge, so there is no potential input tax for the customer. But under all circumstances, you can ask for the seller. Does the seller lose or have input tax deduction for material, services, and other things which he or she bought in connection with the output which is in play here? In rare cases, you also have consequences in later years. That's something which is not relevant here probably, but you should remember that is a part of the testing scheme. Well, okay, let's now view the case again. But before we do that, we should remember that every statement which we give during a case solution must always be grounded on the Tax Act. So naturally, we have to take the Tax Act at hand again and can't solve the whole case without looking at the Tax Act. So that is what we have to do next. So here they are, and I hope you still have them available via the link in the description, or there is also a different video apart from all the other playlists. There is a Tax Act Slides video where you have the link where you can find the translations on the internet and use them. Naturally, let me bring to your attention the disclaimer again. As every translation, this is not perfect. And this is just for schooling purposes, so don't rely on these translations if it comes to investment decisions or other things. Naturally, whenever you use these things in practice, you also go to a tax advisor or contact him or her. But on the other hand, if you are well familiar with these things, first you might in the long run end up as a tax advisor, or you will perfectly understand what they are talking about. So it's a good investment and saves you some money, because the advice will be possible more precisely. Well, here let's go to the Umsatzsteuergesetz. So let's end up here. Here we have the table of contents, and we will probably have to begin with paragraph 1. And here you see paragraph 1, number 1. That was our starting point. Taxable are deliveries of goods and services. They must be made by an entrepreneur acting as an entrepreneur, so within the range of his enterprise or enterprise activities, for consideration, and they must be attributable to the inlet from the perspective of value-added tax. So we have 5 criteria which we usually have to test, and that is where we have to deal with in the course of time now. So let us go to the case again, or what? Why again? Let us go to the case now. Well, Theo Trader has a firm in Tübingen, that's a town in Germany. And Trader tells you about the following events and asks you for your professionally reasoned opinion. So what we hear directly in the introduction is this case is basically several cases because there are several events. So yeah, that happens. So the first thing is on the 1st of January 2001, that is the first year in the case and not the year 2001. Theo got an order from a customer in Brazil. He is asked to send a production machine to the customer in Rio de Janeiro in Brazil. The machine has an agreed net price of 200,000. The machine is delivered by ship during March, and the money is paid by the customer in April. By the way, nobody would probably ever do it this way, deliver to a foreign country without having a guarantee to get the money later, but they do it here as it is described, just to do you and me a favor and make the case complicated and interesting. During March 01, Theo gets an order from a customer in Chemnitz, Germany. The customer needs a special machine, but he needs it for a construction site in China, and therefore he asks or requests, in a polite way naturally, that Theo doesn't send the machine to Chemnitz in Germany where it's not needed, but directly sends the machine from Tübingen to China to the construction site where it is needed. The price for the machine, which has been agreed upon in the contract, is 300,000 plus reimbursement of the transportation costs. The machine is delivered in May, the payment comes in June, and for the transport, a haulier from Hungary charged to Theo a price of 12,000. During April 01, Theo got an order to deliver a complete assembly line to a factory in Djibouti, that's in Africa, and it must be Djibouti because the first one was Brazil with a B, then we had Chemnitz with a C, and now we need a customer with a D. So to Djibouti, a complete assembly line shall be delivered. So in June, all the necessary machines, parts, spare parts, everything which is needed to construct this assembly line are shipped to Djibouti, and then in Djibouti, all the stuff is assembled together by CEO's staff as a complete assembly line, and it's finished in July. The price was 2 million euro, and the additional fee for the installation of the machines was 300,000. That is what happened, and my suggestion is we just deal with it step by step, so one event after the other. And this is exactly what we are going to do now, or better, what you should do now. So if you have courage and a blank sheet of paper or several ones, stop the video at this point of time. Just begin to work on the first event. Try to sketch a solution where you give every necessary logical step which is necessary to arrive at the solution, and later compare with mine, so to see where you are right and where you could be wrong. Okay, so here is the first part of our case, and an old recommendation is let's begin at the beginning. We will always have to answer if Theo Trader is an entrepreneur or not, so let's talk about some preliminary remarks. Theo is an entrepreneur under 2.1 sentences 1 and 3 of the Umsatzsteuergesetz, because he has a independent, constant or sustainable activity and aims at revenue, because he evidently is producer of machines and similar things. Now, naturally, we have to check if that's really right, or if we just remember things wrongly, because I just quoted that from my memory, and that's something which you normally should not do. So we are going to check if that really is correct in the next step before we go on. Okay, so as we can see here in paragraph 2.1, the entrepreneur is defined as somebody who is performing a business activity independently, so without having a boss. And furthermore, that business activity is defined then as sustainable activity with the intention to generate revenue. Not even profit is required, revenue is completely sufficient. Okay, so after we know that our citation was correct, and when we know this, we can go on with the rest. What we should do now is, in all probability, first to make a short sketch about the event number 1. That is Theo sells production machine to customer in Brazil. So what we can do here is just make it clear. Theo, he is in Tübingen, sells a machine to customer in Brazil. What is sold here is a machine. And that machine costs 200,000. And what we always add in cases of goods is the starting point and the final point of destination. So where the transport begins and ends. No, that doesn't work. Let's just copy an empty field. So it goes to Brazil. And it comes from Tübingen. Because as you perhaps remember, the beginning and the starting point and the destination of a good is not always the same as where the people live who are involved in the matter. Okay, now the first thing is there taxability, and the test is paragraph 1, number 1, USDG. That has the following criteria. Is it an entrepreneur? Who does it? Yes. See above. We have tested Theo already. Does Theo act within the range of or the scope of the enterprise? So not as a private person. And the answer is yes. Paragraph 2.1, sentence 2 says that the enterprise comprises the complete activities of the entrepreneur or of the enterprise. And here it's even the core activity. Producer of machines produces machines, so it's not an ancillary activity. Is it for consideration? Yes, he demands a price. So that is clear. Now we come to the vital points. Is it a delivery of a good or a service? Here we should have a look. A delivery of a good is given if it's a tangible good and if ownership position changes. So it is a delivery because it's a tangible good, it's a machine, and the ownership position is the position like an owner changes to the customer. That follows from paragraph 3.1 USDG. At least we hope so. We will have to check it. And now, is the transaction in the indent? And you remember, that has nothing to do with where things really happen. That is just if, from the perspective of VAT, the VAT law decides to attribute the transaction or the event to the indent. So it's decided based on rather arbitrary rules which have been fixed in the law and usually are identical in all states of the EU. This here is covered by paragraph 3.6, sentence 1. The place of delivery is where the movement or transport of the good towards the customer begins, and that is here Tübingen, and that is the inland as defined in 1.2 sentence 1 of the Tax Act. So we have a taxable event in Germany. Now we still have the nice task to check if our citations were correct. You usually check them immediately. I took some time, and because I was already familiar with these rules, so these are the things which we should check, and we do this just now. So what we had to check here is first 2.1 sentence 2. The enterprise indeed comprises the entire business activities of the entrepreneur, so the main ones, the core activity and everything which comes on top and has a connection with the enterprise, the ancillary activities. And we were completely right in deciding that this is here a core activity, a main activity. So the other things which we had to check was if it is indeed a delivery. Go to 3.1. A delivery of a good, that is an activity by which he, the entrepreneur, or somebody else acting for him, enables his customer to dispose about the good in his own name. So transfer of economic ownership, transfer of control. Yes, so that was right. And the next thing we have to think about is if paragraph 3.6 was right, and so let's look for that. 3.6. If a good which is delivered is dispatched by the supplier, so transported, the customer or someone else who acts on behalf of one of those two, then the place of delivery of that good is there where the dispatch or transport or sending of the good towards the customer begins. That's exactly what we needed, exactly what we said there, and so that's correct. The last citation which we brought forward was that Tübingen is a part of the inland. That is usually not necessary, but as we were at it, we did it. And indeed, the inland of Germany is defined in this law as the territory of the Federal Republic of Germany, with the exception of Büsingen, Heligoland, certain free zones, and some other things. And none of the exceptions applies to Tübingen, so indeed Tübingen is part of the inland. So all our citations were evidently correct. We can go on to the next step. So now let's go to step number 2. Is there a tax exemption? And to check is paragraph 4, number 1, letter A, is it an exportation to a third country? By the way, you probably noticed that I always here write to check is the following thing. I naturally have already in mind it will probably apply, but I write it as an open question at the beginning that has in every exam where you are under pressure or in every conversation where you talk to other people, that has the advantage that you will later never have to change that statement. You can just go on writing because the question is always legitimate, and whatever comes out will be your finding in a few lines. Then you write that conclusion, and everything from the beginning to the end was always right. If you just write a supposition first and say, yeah, this is an tax-free expert, and then you check the conditions and find out it's not an expert, then it is awkward. Then you have to revoke from a statement, or you confuse your readers or listeners. So it's always a good idea to begin with a question. Now, if we want to see if it is an expert, we have to check paragraph 6.1 USDG. And that is something where we have to take a look on. So, paragraph 6. A delivery of a good is deemed to be an exportation of that good if during that delivery the entrepreneur sends, transports, or dispatches the good of delivery into the third country, or the customer brings the good of delivery into the third country, excluded the territories named in environment. And additionally, then the customer must be a foreign customer. We need to decide which of the two cases we have, and we have the case that Theo, the supplier, transports or sends the good himself to the foreign country, so it's number 1. That means the only condition which needs to be fulfilled here is that the good is brought to a third territory, and that is evidently correct in our case. So we have an exportation of a good. Well, so we can write that. Paragraph 6.1, number 1 USDG is fulfilled. So the conclusion is it is the exportation of a good. That also implies, as a logical consequence, it is tax-free under paragraph 4, number 1, letter A. Okay, then we still have to look for the tax base. That is paragraph 10.1, sentence 1 and 2, all what the entrepreneur gets minus the VAT included therein. And well, this is not a surprise. Everything which he gets is 200,000. And now the trick is the VAT included therein is naturally 0 because there is no VAT. The thing is tax-free. So that is 200,000 tax base. We naturally have to check some citations again. This is for number 1, and we have to check if this was the correct citation, if we remembered the contents of these rules correctly. And that is what we are going to do now. And yes, that seems to be correct. The exemptions from tax list in number 1, letter A, the exportation of goods as defined in paragraph 6. So there we were right. And the other citation we wanted to check is paragraph 10. So let's look there. Paragraph 10, where are you? 10. The tax base for deliveries and services is the consideration or the net amount. Consideration is everything which the entrepreneur gets, blah, blah, blah. but without the amount of VAT which is owed under the law for this transaction, so without nothing in our case. Indeed, we have the right citations, so we can go on to the next steps. Okay, so number 4, tax rate doesn't happen. Formal aspects, taxpayer responsible for tax declaration is the entrepreneur here, CEO. Don't forget always to say clearly who it is. Our suspicion from my memory is it's 13A number 1. We will naturally have to check that afterwards. Or we should do it immediately, but then I have to use the tax acts too. And then it gets too hectic. Naturally, until you can rely your memory, you always look it up immediately. Tax arisal at the end of the preliminary declaration period. Now, this sentence, as it stands here, is still senseless, and because every month is a preliminary declaration period, so we must specify which one it is. Otherwise, the remark is completely unnecessary and senseless. So, during which the delivery was made, and that is 13.1, number 1, letter A in all probability. I'm not completely sure. We will have to check that because that's a rather complicated citation. So we will have to check that too. The invoice. We'll have to make a remark about the tax exemption. That can be found in paragraph 14, and there I genuinely do not really know 14.4 number where we can find that. So we will have to look these things up. The best thing is we do it now. And here it is. The first thing which we needed to check was if the taxpayer really is determined in 13A1 number 1, and indeed in case of 1 number 1 it says, and 14C the entrepreneur is the taxpayer. Then we needed the tax arisal. That was our suspicion. It's in 13, so let's have a look to 13.1. The tax arises for deliveries and services under normal circumstances. The normal circumstances are that the taxes are to be determined according to the amounts which have been agreed upon in contracts at the end of that preliminary declaration period during which the delivery or service was made. Yes, that is exactly what we need. The next sentence talks about prepayment, and so that's not our case here. And then the other thing which we still needed was something in paragraph 14. That's probably a bit far away, so let's look to 14. 14.4, the list of things which must be necessarily mentioned in an invoice, and we need the thing which tells us there must be a hint on a tax exemption. Number 8, the relevant tax rate and tax amount, or in case of a tax exemption, a remark that for the delivery a tax exemption is applicable. So our citation was number 8. Indeed, that's something which was still missing. We have to add that. So here that was number 8. Indeed. Okay, so that's right. Do we have peculiar aspects, peculiarities? No, we see nothing which requires additional statements. Now we have the question of input tax claims. Naturally, the customer gets his machine tax-free, so there will be no input tax claim. But there is a problem. Trio trader delivers or makes a tax-free output that usually kills the input text on the raw material and other input. However, in case of an export, in spite of the tax exemption for the output, sorry, better this way, for the output, the right to input tax for the material, etc., used for the production of this machine remains unaffected. So he still keeps the right to input tax because it's an expert. That is said in 15.3 number 1 of the USDG, and naturally, as you have already seen, we will have to check that again. So you see this very, very complicated rule here, 15.3, which says 15.2 does not hinder the deductibility of the input tax if the transaction in question are tax-free under 4 number 1 to 7, and we have that exportation was tax-free under 4 number 1. Just to check, still 15.2 deals with input tax is excluded, so abolished or denied if the output is tax-free, but 15.3 says in spite of the tax exemption, you retain, you keep your input tax claims if the tax exemption is under 4 number 1 to 7, for example. That is the case in our case, so our remark was correct that our Theo trader keeps the input tax claims for the raw materials and everything else needed for the machine production. Now that is successfully the finish for event number 1, and surprise, what do we know now? Event number 2. Event number 2 was during March 01. Theo gets an order from a customer in Chemnitz, Germany, and the customer needs a special machine which he needs for a construction site in China. So if we want to make a sketch first, then we have Theo, and Theo lives in Tübingen, and we have the customer, which is, or who is evidently a firm, or the owner of a firm, customer in Chemnitz, Germany. What is delivered here is a machine. Even a special machine. And we also have the reimbursement. So the first thing which might be remarked here is that preliminary remarks before the true case begins, selling the machine plus transporting it to the destination which has been agreed upon is one single transaction. The transport is the ancillary element, so it does not count. Everything which has been paid is regarded as having been paid for the delivery of the machine. So that leads us to the price for the machine is 200,000 plus the 30,000 for the transport. And now we might also think about the destinations. The transport begins at Tübingen. and it ends, sorry, that was a mistake. It ends not at Chemnitz, but it ends in China. Why? The answer is simple. Customer asked for it. And what counts is the, what counts here is the correct transportation of the good. Where does it begin? Where does it end? Not where the people live. That is why we always make these nice notes here to the arrows when we make a sketch. So from Tübingen to China, that is what has happened. And now, after we know that, we can begin with checking taxability. To test is paragraph 1, number 1, because we have not yet become familiar with number 5, and I can tell you number 5 does not come into the question here. Entrepreneur, that's again see above. Theo has not retired in the meantime, within the scope of the enterprise. Scope is probably the wrong English word, but I don't know a better one. Sentence 2, the answer is a yes. This is even a main activity, core activity. So is it for consideration? And that is yes, demand the price. Usually one can later leave away these nice elements. Now, is it a delivery? The answer is yes. 3.1 USDG. It's a tangible good. That's a machine. And selling is change of the position like an owner. So that is what's required for a delivery. And the place of delivery, it's a delivery which is combined with the movement of the goods. So 3.6, sentence 1 USDG was the rule which applies. The place is there where the movement or transport of the good towards the customer begins. So towards the customer's required destination where the goods shall be handed over. Yeah? And that is here Tübingen. So that is in the inland. Again, if you want to write it, you can write it. It's usually not necessary in such simple cases like this city. So it's taxable in Germany. Now, after we proudly and courageously stated that, we still have to check some citations. This, and this again. I think we can believe that with the inland, you probably already know that by heart, but with regard to the rest, we have a short look. Again, just to be on the safe side that we did not commit an error in our citations, because that would be a bit awkward. So let's have a look to the text acts. So let's first check if it's really 1.1 number 1. And indeed, deliveries of goods and services, entrepreneur, range of enterprise or scope, in the inland and consideration. We had the right 5 criteria. Then let's check 3.1. The delivery of a good requires indeed a tangible good, and the transfer of the position like an owner, economic ownership, yes. 3.6. If a good which is delivered is dispatched, so transported by someone, whoever, then the place of delivery is where that dispatch or transport begins. That was Tübingen, that was also correct. And the next citation we had to check is what was it, sorry, that was a mistake. Was it indeed within the enterprise activities? The enterprise comprises the entire business activity of the entrepreneur. That is evidently also right, so all our citations were correct. We can go to the next step. And step number 2 is again the question if there is a tax exemption. To check is paragraph 4 here, especially is it an exportation of a good, and paragraph 6 1. Now you remember that case distinction between number 1, entrepreneur sends a good to the foreign country, then no additional requirement is to be met, or number 2, the customer does it, and then we would have to check additional things. It's number 1, and I just was a bit confused because I saw I made a mistake here naturally. 300,000, sorry, plus 12,000. Here the data were from the first part. 6.1, number 1 is fulfilled. So it's tax-free under paragraph 4, number 1, letter A, USDG. Number 3, the tax base is 312,000. 300 plus the 12,000 which are charged under the pretext of reimbursement for the ancillary service. That makes no difference. And the citation was this. We have no tax rate and tax amount. The taxpayer is TU 13A 1, number 1 USDG, so he has to make the tax declaration on that. The ariser, that is in the months where the delivery is made. 13.1, number 1, letter A. The invoice must be net and have a remark concerning the tax exemption. So a remark concerning the tax exemption, that was paragraph 14, subparagraph 4, number 8 of the USDG. And declaration duties, nothing special. Peculiar aspects of this case, none. Input tax claims are unaffected in spite of the tax exemption. You can still retain his input tax deduction for the raw material and similar input. Paragraph 15.3, number 1 of the USDG, and that would be that part of the case. Naturally, we have to check that again. So what we have to check was paragraph 6.1, number 1, is that our case? Yes, if the entrepreneur dispatches the good of delivery into a third country, that's China, then no additional requirement is demanded because that the customer is a foreign customer is only demanded in number 2. So there we were right. Then paragraph 4, was it the right citation for exports that we said for number 1, letter A? Yes, that was correct. Then the tax base, paragraph 10, was that correct? Paragraph 10 here. The tax base is consideration, and consideration on net amount is everything which the entrepreneur gets without the amount of VAT which is owed under the law. So the net amount, yes, that was right, including the amount paid for ancillary things. Then we had to check the invoice. 14 for number 8 we need 14 for number 8 we need to give some remark to the tax exemption which is applicable. 15.3 was also relevant. In spite of a tax exemption, which would normally trigger 15.2, the input tax gets lost. In cases of tax exemption under 4 number 1, that is our case, the input tax claim remains unaffected. You keep the input tax in spite of the exemption. What also played a role and was cited by us was 13a number 1, the taxpayer. Let's look at it. Oh my God, yeah, here. Indeed, the taxpayer is always, in cases of 1 number 1, the entrepreneur, that's you. And the tax arisal in the normal circumstances is at the moment when the delivery was made, the preliminary declaration period in which the delivery or service was made. Yes, so all our citations were correct. Now we could also still talk about the treatment of the haulier. But I think we should leave that out. This is not the focus of this case, and go now to transaction or event number 3. So let's first again think about a short sketch of what goes on. So we have Theo, I'm keeping it. And Theo here does something for a customer in Djibouti, in Africa. And what is done is a machine plus stalling it. And now you get probably the shock of your lives when you think about where does the movement of the good which is delivered begin. There is a very fundamental insight or a rule which says the movement of a good towards the customer cannot begin before that good is finished. Now, what the customer in Djibouti has ordered was not a machine, but an assembly line. Sorry. And that assembly line doesn't exist before it has been assembled and installed at the location in Djibouti. So the first moment when this good which has to be delivered exists at all is Djibouti. So there, only there, the movement of the good towards the customer can begin. Now, when the assembly line is once assembled, put together at the location, at the factory in Djibouti, it will probably no longer move apart from during a very, very heavy earthquake. So that means the first place where the movement can begin, because the product exists there for the first time, is also the last place where the product ends up. So here we have a movement which is no movement, because we have here let's give it another color. We have here Djibouti, first place where the movement of the assembly line could begin. And it also stays in Djibouti, which is a surprise. So this is a delivery without a movement. After we have seen this, we can just begin to comment the situation. Oh, sorry. So first thing is taxability again. To test is paragraph 1, number 1 of the USDG. Is it a delivery of a good? And the answer is yes. Assembly line is a tangible good, or several of them, plus sale is change of ownership. So paragraph 3.1 USDG is fulfilled. The place of delivery, that is under paragraph 3.7, and I explained why just now, because the first place where the good can be moved is the place where it ends up in the end already. That's Djibouti. And that's not in the German inland, and nowhere in the EU in the inland. So this is not taxable. Then everything else. 2. Tax exemption. No, there can be no tax exemption. It can be no X, but the good existed for the first time in Djibouti. It stays there, and what is not taxable cannot be freed of a tax. Where a tax is not possible, you cannot free somebody of that tax. 3, tax base, forget about it. Tax rate, forget about it. Taxpayer, okay, there is no tax, forget about that too. No peculiarities, no wrongly written invoice, and so the next and last thing is input tax claims. The input tax claims for the material, etc., for the production of this item remains deductible because it was acquired for the enterprise activities. 15.1 number 1, and it is not tax free, so that a cancellation of the deductibility did never come into the question at all. That's different, huh? Because here nothing is tax-free, so there can be no event which endangers the deductibility, and that's already everything. Yeah, we want to check naturally if 3.7 is the right rule for something without movement of the good, and 15.1 number 1 might also be interesting to look it up. That is what we need to do still, and then we are probably finished. So first check, does paragraph 3.7 really say what we suspected it to say? So deliveries without a movement. If the good which is delivered, sorry, typing mistake, is not moved or dispatched during the transaction, then the place of delivery is where the good is situated at the time when ownership changes. That was in our case Djibouti, and we had something without a movement, so that was correct. And the other thing which we wanted to take a look on still was 15.1 number 1, if that really is the rule which says that the entrepreneur can claim input tax for the tax for deliveries and so on, which was made by somebody else for his enterprise. So for everything which you do. And just to be on the safe side, you see here in 15.2 that an exclusion or cancellation of the input tax is only possible if there was a tax-free transaction, or if a transaction happens abroad but would be taxable, tax-free if it were done in the inland. And selling an assembly line in the inland would not have been tax-free. And that's it. So last case was so not an expert, but just a production abroad. And here you see why checking the taxability always plays a role. Yeah, thank you for watching this rather nice case in a real life situation, so an exam. Probably, if you're well trained, that takes 20-25 minutes or so at most, because you will, when you always look up the tax acts during preparations, you will be relatively quick dealing with all these citations in real life, so in an exam situation. Thank you for watching. It would be nice if you press such a like button, recommend the channel to others, or just simply come back next time for the